levels. So the same thing applies to this. We could say here you mark the candle body close, price respected it, respected it, respected it. You then come and also mark here candle body close. You'll find candle body close, candle body close, candle body close, candle body close. But this leads to analysis paralysis as it is going to darken your chart. So what you do, you delete that and draw one zone. See price respected it, respected it, respected it, respected it, respected it, respected it. Welcome to another video tutorial of support and resistance mastery. And in this video, we are going to look at the different types of support and resistance levels or areas or zones. So a support level, you can also call it a general area, or you can treat it as a general zone. So to start with, we are going to remind of ourselves what support and resistance is. So we say in support and resistance, when price moves and it finds a rest, it reverses. This level is termed as a support level. This. So you draw and mark the level as your support, or you can mark it, you can mark the level. Let's say this is my resistance. So this is a resistance. Then when price comes back into the same level in the future, you expect to see possible trade opportunities. So when price comes back in this same area in the future, then you look for possible trade opportunities. So you find possible trade opportunities. Here, when price comes back into the same area, it is going to give you opportunities here. So what you do, the first thing we said, mark the level, then wait for price to come back into the same area and look for the possible trade opportunities. The same thing applies to a downtrend. You have your level here. So you wait for price to come. Let's say you identify price came here, it traded and moved away. So you wait for the same price to come into the same level, and then you look for possible trade opportunities in that area. So let's say this is our resistance. This is resistance. And then price comes back into the same area in the future here. So we shall look for possible long trade opportunities in this same area. So here look for possible trade opportunities. This is our resistance level. So once price comes back into the same level, it presents possible trade opportunities. So first price came into this level, it created a resistance and then traded away. When price comes back into the same area or zone, you look for these trade opportunities to go long and trade with the momentum. So these levels, at times, we call them key levels. In the future videos, I'll be showing you that these are key levels. We don't support and resistance, you can regard them as key levels. I repeat, when you are trading support and resistance, treat these areas as zones, because you can have here, this is the price level 1.217, but the market can come and break above it before reversing down. Why are these levels important? Because in the past, when you look here, price came and it traded away, it reversed, giving you this level. So when price comes back into the same area, you will have buyers and sellers look to take action on the same level. And when I refer to buyers and sellers, I'm meaning institutions. Those who closed their positions while at this price level, they will look forward to do the same when price comes back. And those who opened up positions here, they also want to open up new positions in the same key level. So we said we shall treat these levels as key levels. How to draw support stroke resistance key levels. So to draw support and resistance, this is what you do. There are different ways you can draw support and resistance. On my bottom here, I have this horizontal ray. You can put this horizontal ray here. You mark the candle body close. Let's say here, you come, put your line here, then you mark this candle body close. The same thing happens, you can also mark this candle body close. So you see, when you mark this, we also have this one here. So you pick this ray and place it. Let's say I'm putting my ray here. This is the ray. Again, different color here. So this is our ray, this one. If you look very closely, this is our horizontal ray here. So I place it at this point. And then you realize price reacted to this level. It again came and respected it here. We have price respecting it here, and also price respecting it. So if you follow this line, you realize that each time price comes to the level is respected. The level is respected. So that is one line drawn. Then we also pick another line here. If you mark this line, you will see price has respected it here. Price has again come in to respect it here. It has also respected it at this point, and again respected here. Now, this is okay as support and resistance key level, but what this does, it darkens your chart. It leads to what we call analysis paralysis. So what do you do? Instead of us using these lines, we say delete the levels, draw one wide zone. Then I draw one zone here using this rectangular tool. You can set the tool. If I click on the tool, I come to settings where there is style and there is extend. You extend right here. So that means your level goes up to infinity. In the future, when you have marked such a level, the level you have drawn here, in the future, you will see even when you follow the same level, price is respecting it. Price comes and respects the level, respects the level, respects the level, respects the level. So you keep using the same line to trade. If we come back here, you can see this is how we draw those zones. So instead of you marking every one level, every here and there, draw a zone and wait for price to come in the zone and react. So the same thing applies to this point. We could say we draw a level here where the candle closed. We also have this one where the candle opened. But if we do this, it leads to analysis paralysis. So what we do, we remove these lines, we remove all of them and draw one zone. So if you follow this line or this rectangular zone drawn, price has respected it here. It has respected it. It has respected it at this point. It has again respected it here, and so on and so on. So each time price comes to the level, it reacts to the level. So the same thing applies to this. You could say this is candle body close, candle body close here, then candle body close. So the same thing, it leads to analysis paralysis. So what you do, you delete these lines, delete the lines, and then you draw one wide zone here. So you will be looking for price action that comes into the level, and then you observe. So you see price came here, it came here, it came here, it came here, it came here. The same thing applies. So even when you go forward, you see price came into the same level and continued respecting the level. It continued to respect the level. So you draw a wide zone instead of treating each level separately. And then the same applies to this. We could say you have candle close. Again, you have candle close here, which also leads to analysis paralysis. So what you do, draw one level, mark these two levels here, and then wait for price action that comes into the zone, and you read price action. So that is starting simple, how to draw support and resistance levels. So the same thing applies to this. We could say here you mark the candle body close, price respected it, respected it, respected it. You then come and also mark here candle body close, you'll find candle body close, candle body close, candle body close, candle body close. But this leads to analysis, paralysis, as it is going to darken your chart. So what you do, you delete that and draw one zone. See price respected it, respected it, respected it, respected it, respected it, respected it. Then we also have this here, the last one, where price came and tapped in. So you draw one wide zone. So when price comes into this level, you just read price action and act based on that. So that is how we draw support and resistance key levels. So let's continue with the types of support and resistance levels. We want to see support and resistance levels found on the higher time frames. We want to see support and resistance levels to be found on the higher time frame. So what do we mean by the higher time frame? This is a monthly time frame. This is a monthly time frame. So on the monthly time frame, if you come to the monthly time frame, you're going to see here price gave you a level, you mark it. The same thing applies to this. Price gave you a level here, you mark the same level here on the monthly. Mark the level. Then you come, you mark the same level on the monthly time frame, you mark the level on the monthly. The same thing applies to this. This is where price reacted on the monthly. If we want, we can extend it this side. Then we also have this level. Price reacted to the level on the monthly time frame. Then we also have this one, monthly time frame. We also have this on the monthly time frame, and we also have this on the monthly time frame. So if you look at the levels I have marked on the monthly here, when you come to the monthly and plot these levels, you plot them on the monthly time frame. You plot the levels cleanly. This is level. So this is our level here. This is our level. This is our level. And then this is our level. The same thing applies to these ones here. You plot them. So when you come to the daily time frame, you will see these same levels, the ones you have plotted on the monthly. Price is respecting the levels. You can see price tapped into the level, it tapped in here, it tapped in here, it tapped in here, it tapped in, it respected it, it respected it, it respected the same level here, here. When price comes into the level, it trades away, it comes in, it trades away, it comes in, it trades away, it comes into the level, it trades away, it comes, it holds, consolidates, breaks below. So when you do like that, those are the major key levels you will come up with. So you go on the monthly, draw those levels, and you can even mark them as monthly levels. So we have here, price came and respected the level. The same thing here. If we look at where price is today, price is trading in between this level and this one. You see, price came, reached here, turned around, went up, came, went up. So these levels are respected by the market, and those are the ones we call major key levels. Major key levels. So price is respecting the levels here. Now, if we go to the weekly time frame, let's say we go to the weekly time frame. So after you marking the monthly key levels, we then come to the weekly. On the weekly time frame, you will also find other levels. So let's say this is a weekly level, price reacted to. We give it a different color. Let's say maybe this is this color. You also mark this level, yeah. So you realize these levels you have marked in between the monthly levels, which are weekly levels. Let's say price respected this level here. It again respected it here. Price came and respected the same level. It again respected the same level. Then price is respecting it here. We then see price respecting the same level here. So each time price is below the level it sells, and each time it is above the level it buys. Then what happens here? You see price has broken below the level and it is trading down here. So these are weekly key levels. Weekly key levels hold more weight, just like the monthly levels. These levels hold weight and they can provide possible trade opportunities. These are the levels the institutions will look at to make trading decisions. The same thing applies to this. You see price has come, it has respected it here, it has respected the level, even when price tried to break above, but later on price came back inside. The same thing applies to this one, support and resistance. So here you can indeed tell this market has a wider room to move from this key level to this one. So once price comes and breaks the level, you look for possible trade opportunities and trade following that direction. So the market moves from zone to zone, from this zone into this zone, from this zone into this zone. Then here you will also look for price action that is telling you the market is doing this. So weekly and monthly support and resistance levels hold more weight, and there are high chances of price reversing off of those key levels. So we are going to look at another thing on support and resistance levels. Type number two is what we call the round psychological numbers. Round psychological numbers. So these round psychological numbers under types of support and resistance levels. We have round psychological, let's say round psychological numbers, or you can call them whole numbers. Whole numbers. So these are numbers which are whole numbers or even numbers. So this is just a psychological attribute. Traders will always like to take action at key levels that are also round and whole numbers. So these levels, let's say whole numbers, we have like 1000. We have numbers like 200. We have numbers like 100. We have numbers like, as long as it is an even whole number. So if we are referring to stocks, we can say maybe we can say $500 level, or we can say $1,000 level, or we can say $100 level. So these whole numbers, the traders will always want to close and open positions using these whole numbers. So these levels or these price levels should be treated as general zones. If we come to, let me say here, this is Euro USD. Now, if we come to Euro USD, let's mark some levels here. If I put here this, so I'm going to come to coordinates. This is 0.69600. If I put 00, you see price came and reacted to this. So if I copy this number, then I come here and I paste this level. So if you look at this level, it is 0.9600. If you remember our knowledge of pipettes, we don't count the fifth digit number. But price came and stopped at 0.9600 and it reversed. See, price traded away. So the same thing applies if we come to this level here. If we come to this level, we mark, put 00, say okay. You will see, let me copy these coordinates, put them here. So if you look at this level, if I copy these coordinates, copy, okay, then come here. So if I read, if you look at the side here, we have these levels, this level as 1.0200. So this becomes a round whole number, a level, and you can see when price was here, it reacted to the level and traded away. The same thing applies to this. I put here, then you come and put 7800. You see how price is respecting these round psychological numbers. So if you look on the sides, we have 1 point. If I mark this level here, it is 1.1800. So these are round psychological numbers. The market will always load positions and offload following these levels. These are just psychological levels. So traders and institutions use these levels to measure the price ranges, and they make decisions based on some of these levels. If we continue, let's look at some other instruments. So this is Apple stock price. This is Apple stock price. If we put our line here, if I just mark it to be 250, then I come and mark here, this is 280. Then also come and mark down here, 1180. Put OK. So you will agree with me, this market gapped into 180 level. This is $180 level here. Then here we have price respecting the 250 level, 250 price level, and then we have price respecting here the 280 price level. Now today price is at here, we shall take the $300 level, say $300 level. This is okay. We take the price above this. Which could that price be? Which price level is it? Let's say this is 320 level. So these round whole numbers, the market does respect them. These round whole numbers, the market does respect them. So you look for price action taking place at these round whole numbers. And I can tell you, one of these days, you will see Apple stocks pausing here because we are at a round whole number. You will see when traders are closing and opening positions. Now here, these are the major psychological whole numbers we look for in trading. So for stocks, then when we are looking at currency pairs, we look at round psychological numbers of at least 500 pips 500 pips, then 1000 pips, 500 pips, 1000 pips. Let's say price moved from here, from this level, then you count 500 pips from here. So 500 pips, we'll say 0.25, so it will be 0.700. Then you put OK. So that means from there to here will be 500 pips. Let me put back 0.200. Okay, you mark. You then get another line. You put it here, 0.0700. Okay, so here to here, this would be 500 pips. You again mark. Let's say if we are to mark 0.01 for 1000 pips. So we put 1 to be okay. So from here to here will be 1000 pips. Then also from here to here, if we mark another 1000 pips, it will be 0.0200. And then it will be coming here. So this is what you can see, that from here price came to a round psychological level, and you see what happened. This one, are you seeing 0.1.200 round psychological level? So these are psychological levels, and the market does respect them here. 1.200. This is a round psychological level. So the same thing applies if price comes into this area here. We mark this, the round level here is 0.13. If we are to mark 0.1300, we shall have here. So we wait for price to come into this level and see what the market is going to do. But you who is learning from me, I would say when you are trading following this, you follow 500 pips and 1000 pips. You trade following 1000 pips and 500 pips. So if we say we mark from this level 500 pips, it will be 1500, like this. So we mark this level. You see what happened. Price dropped and reacted to the level. If we again mark from here, this is 120, we then get another level here. If we put 1000, we have this as a round psychological level. So from here to here is 1000 pips. So that means if price moves from here to here 1000 pips, we look forward to take action. That is all with round psychological numbers. You look for price in between 500 pips and 1000 pips of where price